Is Santa Claus coming to town this year? I guess we're going to find out very shortly. We're going to look at presidential cycles. Looking ahead, the second year of midterm election cycle is always a little bit iffy. We're going to dive into that. We're going to look at December seasonality specifically, and do we get the Santa Claus rally I mentioned earlier? And then we're going to look at current money flow stats and see where we are as of right this second. So let's dive in. Cool. So December, as we know, seasonality since 1950 to 2025, that's 20 or 75 years. December is typically a good month. I mean, November is, we're in the strongest part of the year right now. Although October was okay, November was fine. These haven't been as impressive as we had a surprisingly good summer, which is unexpected. September wasn't down as it typically is. So that was different. But, historically, we're still in a good part of the year. January tends to be pretty good as well. So seasonally, we're still in a good place. Santa Claus should come to town. I'll show you how that plays out. Typically in December, this is the 75 years, what typically happens, the market kind of meanders through about the 15th and then off to the races. Typically the Santa Claus rally, though, is from Christmas to the first week of January is really what that refers to. A lot of people try to put different dates on it and make it say it's something else, but it's really about the Christmas through New Year's run. But really from the 15th, historically, the market's pretty strong. Not a whole lot to be concerned about. But if we want to be concerned about something, then we want to look at seasonality of year 2 of the presidential cycle. And that I left this way, and we'll be using this all next year just so we can check in. But here's your sneak peek. Starts off pretty weak right at the end of January, historically. This is the past 25 years, so that is 6 second-year elections since 2020 is what we're looking at. They all kind of accumulate, and it gets ugly around January, and then you can get a little relief rally, but then just a slow grind can be ugly all the way through the summer. Maybe a little summer rally, another slow grind, and maybe a October, November rally is pretty common. It's common in every year, actually, but the overall big picture tends to be a slow grind downward with some trading opportunities throughout. So that's historically what happens. It doesn't mean it has to happen again, but that's why we look at the next charts of data flow, what the money is telling us. Money drives stock prices, so we're going to keep that in mind always. So as of right now, we're actually okay. We did have that brief little mid-November slump and then a very quick rebound on the week of Thanksgiving. And then from there, we've really just kind of been grinding sideways. The market has not really gone anywhere. I know today it was down a little bit. Now it's flat. Not a whole lot of movement to talk about. But, trend-wise, we're above the trend. Money is coming in enough to be like, not a whole lot to be worried about at the moment. So that's pretty good so far. On the short term, we did get a little red dot. We got a little bit of weakness around the Fed day yesterday, and then we're kind of scooping up today. And that's largely because small caps are doing all right, as well as Dow and I believe financials are having a strong day, while tech is having an ugly day. But then you think tech and semiconductors had a great run up in the last few days. So it's not that crazy to see it sell off or, consolidate a little bit after a great run up. So we're all okay there. The money flow is positive. It's in the right direction. It's a little bit weak in the short term, but overall, I'm not super concerned. All right. And then the market indexes, again, we're all pretty strong. We're on the left side. That's where I want to be. On the positive side, the only negative is China. Though it's MACD, MACD data is turning positive. So we could see this turn over and go to the left side and show some strength, but we have weakness in Latin America. That's interesting. There's some odd news going on down there right now. But otherwise, what's the top? Small cap, mid cap, emerging markets, developed, S&P and NASDAQ, and then Dow. So we're all pretty good. The broad indexes are all moving together, and they all tend to move together quite a bit. So it's a good sense of overall how things are going. And China and Latin America tend to act a little bit differently. Then sector-wise, the only sectors we have positive rate are communications, financials, and industrials. The first two are actually trending positive, so that's pretty good. But then we have a lot of negative trends. But I think those are going to start undoing, although we need a little more push to see that happen. But, -8 to 3, that's not super strong. That backs up the short-term data I showed a couple slides ago that, short-term, it's not that amazing. These are only 4 days, 4 to 6 days of negative. So they haven't really been negative that long. But this trend is a little bit interesting, but I don't think it's going to hold for now. I think we're more likely to see that rally come into the end of the month. But actually, it would make sense if historically we get a choppy, messy market December until about the 15th, and then from there, then it runs up pretty good. So I think this makes sense. We'll have a choppy, messy. Maybe it goes down a little bit for a couple of days. Nothing really that concerning. I'm not seeing much in the data that says there's a problem. And then it sets us up really nicely for a year-end rally. I think it's very possible. Setup is there. Watching the ducks go around the pond, they're all up and to the right. That's not a bad place to be. This is where I want to see a grouping. I will be concerned when these start rolling over and pushing down into weakening in this orangish yellow box. then we have a problem. But for now, I know they're pointing that way, but they can hang out here for a while. It's not, this is weak but not bad. These are all fine. Utilities down here is the only problem child, so that might be a problem. And healthcare is kind of coming down here as well. Everywhere, everything else across the board is actually in the right place, leading and doing all right. So no fear there. And then finally, we have the new lows, which is a great indicator we started using this year, largely due to Bonnie Gortler, who worked with the guy who created the MACD calculation. That's kind of cool. This is one of her big things, is using the new lows on the NYSE. And is there a problem? When it's down here, you're like, okay, we should be cautious. When it's up here, there's really no reason to be concerned. Funny, last webinar month was right there, and then it sold straight off in November, and then we kind of saw the rally come back with that data. If new lows are not being hit, then there's really not a lot of fear in the market. Back in April, when we had I think it was the tariff tantrums, this thing went down negative 1,000. This is only like 160 at this point. This is not scary. But when you see these big sell-offs, you're like, okay, something is wrong deep in the market. But then you can also watch that for when the fear subsides, and then the rallies can ensue afterwards.